Hey everyone, welcome back to Chart Stoppers. Before we get into today's stock, I just need to remind everyone that this channel is about looking at different stocks and mapping out their key support and resistance areas on their daily charts. Also, we will be identifying any trends a stock is in and any key technical patterns we can find on the charts. Don't forget, this channel is for educational purposes only, and I am not advocating to buy or sell any of the securities talked about on this channel. But I am here to point out key factors on the charts that do impact the price action of a stock. Also, I provided a link in the description for Webull. You could use it to start an account and you will get 2 free stocks. And don't forget, we will be doing 3 videos per week on 3 different stocks. So if you have a recommendation for a video, leave a comment below and I will try to get to it. Also, don't forget to subscribe to this channel and have your notifications on so you don't miss out on any new content here. Okay, so let's get into the market today. Today is January 14th. 2022, and you can see here the S&P 500 is down 0.65%. The Dow is down 1.06% today, and the NASDAQ is down 0.32%. So it is a red day in the market today. Today is Friday, and we've been having a major red week going on to go along with the past couple weeks. We've been seeing a correction in the market, a big turnaround that's been going on, a lot of rotation going on underlying in the market, and you could see that a lot of people are rotating out of the tech sector in the market, and they are rotating into value plays, and hopefully, we will see an end to this selling, and we will see a flattening out of the market soon. Hopefully going into next week, we will have a shortened week next week. With the Martin Luther King holiday, so the markets will be closed on Monday. Hopefully everyone is reminded of that. But let's get into the stock I wanted to take a look at today. Today I'm going to be covering Amazon. I've done a few videos on this one in the past. I'll provide a link in the upper right hand corner to the most recent one if you want to go back and check that out to see how I got to where my chart is today. You should be seeing that link right about now in the upper right hand corner. But at the time of this recording, Amazon is currently trading at $3,216.15. It is down $8.13 today, or the equivalent of 0.25%. In the past week, Amazon is up actually 0.18%, and in the past month, Amazon is down 3.72%. Going back 3 months, this stock is down 2.59%, and going back a year, it's only up 1.56%. So if we go back to where this stock was trading a year ago today, let's try to find the daily candle from a year ago today, and you could see it is right here, January 14th. Of 2021, and we closed the day on that particular day at $3,127.47. So that was our closing of that candle a year ago. So not much has happened since then, as you could see. As the stock is only up 1.5% going back a year. So this stock has pretty much been trading flat since then. You could see it's been stuck in this range between $3,000 and $3,500 since getting into that range back in July of 2020. So once it got into that range, it has not been able to break out of that range since then. We did see a brief breakout in this area right here. This was between July 2021 and August 2021, but then they had a bad earnings report. They missed on earnings, and that caused the stock to break down, a huge sell-off after that missed earnings report, and it caused the stock to go back into that channel that it's been trading in, and it's been stuck ever since again. And you could see right here, it did briefly break out again, but you could see once again, it's sold off, and now it's been stuck back in that channel. So let's quickly go over our support and resistance areas on our chart here. You could see my top resistance line is at $3,556. That is the area where we need to break through and get above to see a breakout for this stock. You see, we have broken above that briefly, but we haven't been able to maintain above there long enough for a breakout. You could see, when we did break above there, we had that earnings miss to send us right back below that resistance area. So we did have a brief breakout above that resistance point, but that earnings miss caused us to fall back below that resistance area. Okay, so that is the big resistance point that we need to get above to see this stock break out of this range here. Okay, now going down our chart, this main support area that we've been sitting at right now is $3,175. That is where we saw the stock fall to after missing that earnings report. This was back in July of 2021 after that big miss on earnings. The stock did fall all the way down to that support from the all-time high of $3,773.08. So we saw it fall from that all-time high, and it did fall to that support area, ultimately where it bottomed out there. Okay, so that is a key area on our chart, that support line. And it looks like that is where it is trying to bottom out right now. You could see we did have another bottoming out right there. This was back in October of 2021, and now it looks like it's trying to test that area again and try to bottom out there again and hopefully reverse at that area. We've seen buyers come in at this area before, and hopefully we see the same buyers come in again and cause the stock to reverse. Otherwise, we may see this stock fall to this other support area at $3,000. That has been a key level also on the chart. That's the bottom of our range that we've been talking about, that the stock has been stuck in since July of 2020 when it got into this range. That is the bottom of our range there at $3,000. So that will be a key level to watch if the stock does not hold this level of $3,175 here. So if we see a break of this support here in the near future, we will be looking at this $3,000 level for support in the future. But hopefully we will see a reversal sometime very soon, hopefully with earnings coming up. I think their earnings report is coming up on February 4th. I could be mistaken, but that's what I read. February 4th is when they do report their earnings. So hopefully with this earnings report coming up, we will see a little bit of a run up towards earnings, and then the earnings report will boost the stock price and cause a reversal around this area again with buyers coming in after the earnings report. Okay, so we should be expecting a very good earnings report after the holidays, and the holiday numbers coming with that earnings report. Another thing to point out on this chart here, you could see ever since getting into this range here, this $3,000 to $3,500 range, we saw Amazon making a series of higher highs and higher lows, and I've mapped that out with this green trend line here. You could see, we had a higher low right here, and we had a higher high right here, and then we had another higher low right in this area. So we did have a nice little uptrend that it was on as it was continuing along in this channel. We did not see a retest of this $3,000 area anytime past, looks like March of 2021. So after March of 2021, we never saw the stock go below that $3,175 support line. So you could see it was making those higher lows and the higher highs, as you could see up here. Okay, but just recently, with this recent sell-off in the market, you could see it has broken this trend line here with this lower low that it's made right here, coming back to retest this support here at 3,175. So that is not good to see on the chart because it has broken our trend line and it's broken our series of higher lows. So now it has made a lower low, and that could possibly mean we might see a retest of the $3,000 level before a reversal could be made here. So that is one thing to watch. If this earnings report is not good, we may definitely see a retest of this $3,000 area. So that is one thing that I am kind of uneasy about looking at this chart going into earnings is that it has broken this trend line so close to the earnings report here, and we are not seeing a run up into earnings like everybody thought here. Now, it could be just the market conditions, and with the Fed hikes coming this year, everybody is dumping their tech stocks. It might not just be an Amazon thing, but this does not look good heading into the earnings report here. And if they miss on their earnings, this could very well be, at least dropping down to 3,000, if not lower here. So I would be very careful heading into that earnings report if you are trading this, or if you are looking to buy here. I would not be buying any of this stock right now. I would definitely wait till after the earnings report to be buying, just in case something like that does happen here. As you could see, it is making that lower low here, and it could drop even farther. I would definitely wait here. You could see with my red trend line here, we are still stuck in this sharp downtrend, and we are not even close to breaking out of this downtrend. We are in this descending triangle formation going down into our support here, and we need to kind of build a base here and get back up to our trend line to break out of this descending triangle here. Okay, so I'm expecting us to at least go down, test this support at the 3,175 area. And then after the earnings report, I'm expecting it to either break out of this descending triangle right here and make its way up for a reversal, or it's going to break down this support and head towards this $3,000 area here. So that is what I'm expecting for earnings on February 4th. So I would be watching. I think it's going to consolidate here up until earnings inside this triangle here, above the $3,000 $31.75 support, but below this trend line. I don't think we'll be seeing a reversal above this trend line before earnings. We might see a little bit of a run up before then, but we're not going to see anything crazy until that earnings report. So if you're trading this, I would definitely trade it accordingly as to what you see here. You're probably not going to see much of a run up into earnings with the market conditions that we have here. We have a shortened week next week, and we just have a lot of selling in the market here, a lot of fear. Not a lot of people are buying these tech stocks right now because of the rising interest rates. So you're probably going to see a lot of some consolidation. Not much run up into earnings here. Maybe a test of this, support here at 3,175. So I would look for the completion of this descending triangle here going into the February 4th earnings here, where we will either see a reversal, a breakout of this triangle here, or we will see a breakdown of this support and possibly a retest of this $3,000 support. So anything could happen. It's just a matter of if they beat their earnings, which, they do have the earnings after the holidays here, after the Christmas holiday, after New Year's. So it should be a good earnings report. They're going to have those holiday numbers in there. So I should, everybody's expecting them to beat the earnings report and to have some pretty good numbers. So we should expect, a reversal around this area, just like we saw back in October and back in August here. So hopefully we see that again after this earnings report in February. But only time will tell. We'll see what happens after the report. And, we can only just wait and see right now because we're not going to get much of a heads up before then with this market conditions here as we're going through this correction. So let's take a look at the moving averages on our chart here and see if we could get any help from those. And as you can see by looking here, the 200-day here in the yellow, we are well below that. We're well below our 50-day moving average here in the dark blue. Our 21-day moving average here in the light blue is acting as strong resistance on our daily chart. You can see how that mimics my trend line here. So that shows me that our 21-day moving average on our daily chart is acting as strong resistance. You can see how the daily candles trade up to that 21-day moving average and sell off all the time once we get up to that. So every time we get up to that 21-day moving average on a daily candle, that is where we sell off from. So watch out for that in your daily trading. As you can see, the light blue moving average, this is our 21-day moving average on our daily chart. So everyone should have that on your chart. As you can see, I'm highlighting it right now. And that is where we are selling off from on our daily candles. Okay, so every time we reach up to that point on our daily candle, we start selling off. And this is going back to, it looks like the beginning of December here. Or actually, you could go as far, it looks like the beginning of December when we fell below there. That's been our resistance here. So every time we get up to that point, we start selling off. As you can see, it mimics my trend line, and we've been stuck below there ever since then. So if we want to see a reversal, first, we need to see a break above this 8-day moving average, which is in the white. Okay, you can see how we're stuck below that also. That shows a downtrend. When we're stuck below that 8-day moving average. And then, when we do see the reversal, we're going to see a nice close above this 21-day moving average, a nice breakout above there. And then we will see a climb towards that 200-day. And then ultimately, we will get above there. And then we'll start to climb above that 50-day. Okay, but the most important thing here is the 21-day because that has been acting as strong resistance. And once we can climb back above there and get a couple candles closing above that, that will show us a reversal here and a breakout of this downtrend we've been stuck in. Going back to, it looks like here, this downtrend has lasted since the middle of November here. Since this top right here, which was on November 19th. All right, now let's take a look at our weekly chart because this one was very interesting. You could see our weekly chart was forming a very nice ascending triangle. Okay, we were on a very nice consolidation ascending triangle formation right here on our weekly chart. Everything was getting very nice and tight. We were consolidating nicely along our trend line here. And then all of a sudden, we just broke the trend line, last week. And now we are well below our trend line. So you could see, we were making those higher lows as we were going along our trend line, making higher highs. And then we were consolidating along this trend line with this 50-day move or this 50-period moving average on our weekly chart, carrying us higher as it was acting as support. Let me zoom in for you so you guys can see this. This 50-period moving average on our weekly chart was acting as strong support for us. Okay, this is in the dark blue here, this moving average in the dark blue. That was acting as very nice support for this stock, and it was carrying us higher. We were on a nice little consolidation here going into this tight little area here right into our resistance at $3,556. And then it looked like we were going to consolidate in that area right before earnings. and then ultimately break out after the earnings report came out above that resistance. But now with this market sell-off, you could see we've dropped below our key support of that moving average on our weekly chart, and now we are well below there. And we're testing our key support on our chart here of 3,175. And if we drop below that, as you can see, we've already dropped below it this week, but we have recovered since then. If we get a close below there, this week or next week, probably not this week because the day is almost over, but next week with the shortened week, we might be falling towards that $3,000 level. So that's what I'm saying with this lower low that happened here in the break of our trend line. That's why that's important to look out for before the earnings report here. It's not a good sign that we broke that key support level here, that 50 period moving average on our weekly chart. So just be very careful with this one going into earnings. I don't like the setup with it. I don't like that break of that 50 period moving average on the weekly chart. So, I'm staying away from this trading wise, because I don't, with the market today, it just looks like it's going to be some kind of weird surprise or something's going to happen. And, I'm just not in for that right now. So hopefully you guys liked the video. Hopefully it helped you out a little bit. That's about all I got for this one. If you guys like the video, make sure you hit that like button. Don't forget to subscribe to the channel, have your notifications on so you don't miss out on any new content here. If you have any questions, leave them below. And I will see you next time on Chart Stoppers.